I think at Box, we had the opportunity to really punch above our weight in terms of telling a story about how the world was changing, how technology was changing. The role of an emerging fund manager and the role of a partner or GP at like a large platform are so different because when you're building a fund, there's a lot more to do than invest. This is a job you do in ambiguity. It's like the ultimate marshmallow test. It's what you're signing up for. So the mental game is a big piece of it. There's a bit of like conventional wisdom that investors are either neutral or net negative to a business. I do think so, and I believe so strongly that not.
Ashley, welcome to the Slice podcast, where we uncover the stories of fresh emerging managers across early stage venture. You are the founder and managing partner of Coalition Operators, a $12.5 million early stage fund investing in pre-seed all the way to Series A. You called it a new model for bringing top women operators into deals and onto cap tables. Welcome to the pod. Let's rewind all the way back. You had a storied career as an operator yourself. Did you always know you were going to start a fund eventually?
Oh my goodness, definitely not. I was going to go to law school straight out of undergrad and had a little bit of a quarter life crisis. Realized law school sounded fun, but I wasn't sure I wanted to be a lawyer. Figured I should probably make that decision before committing to more schooling. And so moved to San Francisco with a friend and kind of fell into the tech world by accident and came to it actually through PR and communication. So that's where I spent the bulk of my operating career. The first 15 years of my career were in communications, including at a VC firm. But no, until maybe a few years ago, I did not imagine that this path would lead me to starting a venture fund of my own.
A VC firm that nobody ever heard about, very small and very non-controversial. You're no stranger, though, to strong leaders, I would say. You work with Emily Aglacia, with Chamath at Social Capital. You were at Box, one of the cradle of the Web 2.0 talent wave. Let's talk a little bit about those experiences and how those shaped the fund manager that you are today.
Absolutely. Box is the natural place to start because I think it's my introduction to the startup world. The first 2 years of my career, I was at a PR agency, mostly working with larger companies, although I did work with one startup. And that's where I was like, oh my gosh, this is so different. The energy, the speed, I have to find a way to get into this. And lucky for me, Box was founded by two guys I'd gone to high school with up in the Seattle area. And when they were looking for a community manager, I threw my hat in the ring. I was totally underqualified, but they gave me a shot. The woman running marketing at the time, Jen Grant, who has since gone on to roles at Elastic and Looker and beyond, brought me onto her team. And I had the chance to grow up with the company and to build and run comms over 6 years through IPO and even a few quarters of being a public company. The rest of my career, one, the power of platform shifts, but becoming the poster company of those platform shifts. So the timing at Box was amazing. We were all coming out of the recession. So there was just like a lot of optimism without a lot of ego. And then there were the dual platform shifts of cloud and mobile in the enterprise. And then the maturity of the SaaS business model. And Aaron and then myself as the comms leader, we really saw our job as not just evangelizing the company, but evangelizing the shift, evangelizing the category, the shift in how people were working. And so I think at Box, we had the opportunity to really punch above our weight in terms of telling a story about how the world was changing, how technology was changing, how it was transforming different businesses and industries. And I saw how powerful that was as an approach to storytelling. I think especially in the early days of startup building, a startup is mostly a story about the future with a few proof points. And so partnering with an entrepreneur as they're figuring out how to tell a story about a future that a lot of other people might not yet see and get their first customers on board, their first investors on board, their first hires on board. That's such a fun role to play. And of course, I've gotten to see how that evolves at scale from like early days through unicorn stage and beyond.
And then you ended up at Social Capital.
Yeah, I had the pleasure of working with Mamoon Hamid, who had been at USVP and led, I think it was like a $5 or $7 million Series B. It was Mamoon's first investment of his career. He now, of course, runs Kleiner Perkins. But after USVP, he had gone on to co-found Social Capital with two other partners, Chamath Palihapitiya and Ted Vainenberg. When Mamoon and Chamath and Ted pitched me on coming to Social Capital as their first marketing partner, actually talent was also part of my remit. It sounded like just a great way to shift from having a very sort of a deep company view, like an operating view, to an ecosystem view, and seeing if the stuff that I had learned at Box was applicable beyond that business. I'd been there for 6 years. I really didn't know anything else. And so that's how I made that shift.
How was it to go from running day-to-day operations of a comp, so one founder, one narrative, one story, from like seed stage all the way to IPO, to all of a sudden being thrown on the other side?
Very different. And I think the thing that was the biggest transition initially was at Box, there was a lot of structure. It was always clear to me how I should spend any given hour of my time. And then at Social Capital, I was a team of one. The pacing of investing is so different. I had so much autonomy and I had a very broad mandate. I would say like the first 3 to 6 months, I just spent learning and figuring out what are all the different ways I can spend my time and where do I think I can have the biggest impact. I will say the thing that was happening around the time I joined Social Capital that made it a little bit easier actually to be a marketing partner there and in charge of the brand and narrative and story was that Chamath did become the CEO of Social Capital and I reported to him. So it was a clearer sort of mandate and reporting structure than most VC firms. I think it's very hard to report to maybe 8 partners who all have different visions for a firm or priorities or want their portfolio company to be at the top of your list. And so in that sense, Social Capital was both a venture firm, but also very much becoming a company. We were launching new capital product, like a public fund. We launched a product called Capital as a Service, which was a very data-driven approach to investing globally where founders anywhere in the world could apply for funding. And then I was there when we took that first SPAC public. So in a way, it was a nice hybrid. I did actually still feel very much like an operator in helping to build a company and its brand. I think that was a big part of what appealed to me about the role, but a lot of the ambitions became clear as I was there and as we were starting to build out like what is the ultimate vision of Social Capital.
And then you were like, I'm done with the Bay Area. I spent too much time here. Let me move across the country.
I coincidentally met Emily Weiss through a woman that I had gotten to know while I was at Social Capital, who had then gone and joined the team. She and I had a coffee. She had been looking for a head of communications for a while, and I thought my job was just to help her think through the role. It's a tricky role to hire for, and Glossier was at such an interesting point in its own evolution and was really growing from being like a cult favorite beauty brand to a real force in the beauty space and a real beauty company that also was very ambitious on the technology front. And it was a great conversation. I think the thing I'll remember most is Emily and I argued about different approaches to comms in that meeting. It was like a really good debate. And I was like, oh, I love this. She's so opinionated. And also she sees the world very differently than I do. And it makes sense. Glossier's origins were from Into the Gloss, which was originally a publication, a beauty blog that sort of took beauty seriously in a way that other publications weren't at the time. And so Emily, between that and her understanding of social media and storytelling from a consumer lens, brought something totally different. About a month later, I was in New York and she pitched me on joining the team. And I couldn't say no. I felt like I would learn a lot, both in terms of totally new category. It's hard to think of something that is more opposite enterprise software than beauty, and also from a leader who had incredible intuition and saw storytelling so differently than I did. And so that's what brought me to New York.
What is it now? 5 years in New York?
I moved to New York in the fall of 2018. And then during the pandemic, my husband and dog and I ended up on what was supposed to be like a short road trip and turned into a 2-year one, circled the country a couple times. But yeah, so off and on here since late 2018. And it's been fun. I feel like I really grew up in the SF ecosystem and loved that. There's something really special about being in a city where your industry is the main thing and where you go to a coffee shop and you run into so many friends. And New York was refreshing in a lot of ways. It was a nice detox in some capacity to be in a city where there were so many things going on. And I had exposure to people who had such different interests It's a different ecosystem in the sense that I think even though New York has grown significantly, but because it's not a tech town first and foremost, I find the ecosystem here to be so welcoming because we're growing, we're building, there are fewer legacy players here. And so I think it's been a great place to start a venture firm because it's just very collaborative. New York is just so social. So you're gonna meet great people, whether you like it or not.
Tell me, when was the first check that you cut? Was it in New York?
Yeah, it was in New York. It was the classic first angel check where it was a good friend of one of my best friends. She was born to build. Diana was the person that like all of her friends went to for hair care advice. She had a full routine that she'd share and she tested all the products. And she had also been doing brand and partnership work for some of the top D2C brands. And so when she decided to start her own hair care product company, it just felt like perfect founder market fit. So she started a business called Crown Affair. And I think it was like December of 2019. And actually, one of the reasons I wrote it was one of my partners at Coalition, Jacqueline Nelson, had been angel investing for a while. And she's been like peer pressuring me to get into it as well, probably because I loved being at Glossier. I loved being at a company that was growing so quickly. But I missed working with founders in the very early stages of company building. Working with founders on narrative when the company is mostly a story is just like a profound privilege. And it's such an amazing thing to do. And so Jackie had been like, the way you get to do that is angel invest. And so that was my first angel check. And it's funny, I think other people would probably have similar stories. There are people angel investing and you wonder like, how does this happen? How do people even hear about deals? And then you start doing it and suddenly you're inundated. It's a very word of mouth type thing. And I think especially as someone who had a very clear skill to offer founders, that tends to be really important in the early stages. Usually you raise your pre-seed or your seed round and you're launching your company or you're announcing the round. And Diana was pretty savvy on external storytelling, but working with media is a non-obvious task, and really making the most of those moments can be really impactful for your business. And so I was hooked and took angel investing pretty seriously. I think I made 20 or so angel investments over the course of a couple of years, and then also some scout investing as well.
The fund actually started as a much broader initiative. You girls were angel investing as friends, if I remember correctly, but mainly you were helping place talent on behalf of other people's portfolio, correct?
Exactly. We all go back, in some cases, a decade plus, and there are a bunch of ways our careers have overlapped. So I mentioned my partner, Jackie. She is the CEO of a company called Tribe AI, which is an AI native services company that helps enterprises build AI products. And then Toyin Ajayi, who's the CEO and founder of CityBlock Health, a $6 billion healthcare startup. It wasn't that at the time. She was much earlier in the journey, but already truly one of the most impressive leaders I have ever met, a physician turned founder. CityBlock Health is a sort of a pioneer of the value-based care model. And then Lindsay Ullman, who actually had been an investor early in her career. She's one of the earliest partners at Google Ventures. And the four of us came together. And initially, we got these big day jobs, but we're also meeting so many incredible founders like every week through our jobs. And we should be leaning into this more, and we should be participating in the early startup ecosystem beyond just giving some advice over coffee. And so we decided to take a more systematic approach to investing. And I think because the four of us have such different networks, such different sector expertise, we saw this really amazing range of deal flow. And it was so fun to look at healthcare companies with Toyin or look at marketplaces with Lindsay and make those decisions together and really operate like a mini VC firm. But we were just doing it for love of looking and thinking about startups, and then of course helping those founders once we invested. And then we saw that founders were excited to work with people who had really tangible skills to offer. And especially one check, you get the four of us. That's a pretty good pitch. But oftentimes those cap tables were pretty homogenous. There weren't a lot of women there. We looked at our sort of male peers and saw they were really active as investors, advisors. And a lot of the most impressive women we knew had these like massive startup day jobs. They were hounded for full-time opportunities, but they weren't necessarily advising, investing, doing board seats. They were just very heads down on those big day jobs. And that felt like certainly a miss for the ecosystem, but also maybe a miss for them as well. And so we thought maybe we can help people do this. Founders will benefit, operators will build their track records and hopefully their wealth and have a lot of fun in the process. But I think what we quickly learned was that if someone wasn't already actively angel investing, the 0 to 1 of that first angel check, there's quite a bit of friction. And we spent a bunch of time unpacking that. We took what we learned and we went to Thrive Capital and General Catalyst and pitched them on this idea of could we find a way to connect more incredible women operators with early stage cap tables at scale. And they both helped us co-create what is the Coalition Network today. And I think a very cool model for doing this more thoughtfully. Basically, what happens is Thrive and GC bring Coalition into their early stage deals. We get to know the founders. We ask them about their businesses, what areas of operating expertise would be most impactful. We go and find like the best possible people given the business that they're building, the challenges they have ahead. And then we do that matching, and where it's a fit, GC and Thrive shared their economics. So we've really taken the friction of capital off the table. It's a twist on an advisory model. Instead of the equity coming from the startup, it's upside coming from the investor. Taking the time piece, you have the filter of a top tier lead investor. And also we're only bringing people opportunities that they're really uniquely suited for. And then the access piece, of course, is solved through this model. And yeah, so alongside our angel and scout investing, we started building out the Coalition Network and connecting incredible women leaders with these early stage startups. And the feedback was amazing. I think obviously there are some founders who have phenomenal networks and they're networks that can write angel checks. And so maybe they know how to build the cap table of their dreams. But for most founders, they either don't have the time, they don't want to slow down their fundraise, they're focused on finding that lead investor, they want to get that round done as soon as possible, or they don't have the networks, or they don't actually know what they're going to need in 6 months, 12 months, because they're in the moment when they're fundraising and not thinking that far ahead in terms of the expertise. And it's been really fun to build that sort of network of incredible top talent. And unsurprisingly, it's turned into an amazing source of deal flow for us as well. We have operators who've started companies who we've backed. We have operators who are active angels and send us deals, or even folks who aren't angel investing themselves, but are like, my smartest colleague from Stripe is starting a business. Do you want to take a look? And inadvertently, it's an incredible superpower for the fund.
The fund that you raised off the back of this, you don't need to invest necessarily in Thrive or GC deal flow. You can go out and cut checks of your own throughout the network and of people that you find interesting and relevant. Of the LP mix, besides like your two big anchors, which are like gigantic names, did you raise from institutions? Did you raise from Super Angel, from other founders? What was the composition of this first fund?
So we started raising Fund 1 at the end of 2021. We were very lucky to have GC and Thrive come in as meaningful anchors. And so originally we were just targeting 8 million and really went out to our networks. The four of us have built our careers in startups. We know a lot of founders, a lot of incredible startup leaders, a lot of GPs at funds, and fundraising is very different in this current environment. But at the time, end of 2021, it was still a little derpy. And I think like for Fund 1, you're fully betting on the people. And obviously we had an angel track record, but I think the folks who came in for that fund knew that we had strong networks, had reputations in the sectors that we had been building in. They probably believed that we would actually be quite helpful to the startups that we backed. And the Fund 1 LPs were just such a fun mix. In my case, I was lucky to have the Box co-founders both come in as LPs, and Emily Weiss came in as an LP. And then a bunch of other funds or GPs, Kleiner and Lux backed Fund 1. We also had GPs from A16Z, Lower Carbon, Box Group, et cetera. I think what's been very cool and that I probably underestimated at the time is how much that LP base would be an advantage for us as we built the fund. Our LPs have been incredible with customer intros, with offering direct support. In some cases have done follow-on rounds in the startups that we found in the sort of pre-seed and seed stages. As I think ahead to Coalition scaling over the years, I hope we can always build an LP base that obviously that we're proud to work for, but also that can be like a real superpower for the fund and a boon for our portfolio.
I think you're the epitome of our thesis in the sense that on one end, there is the unbundling of the early stage accelerator model, where you have really skilled operators like yourselves that bring tangible value add onto a cap table. And the founders are interested in piecing that first fundraise with small checks from like you. And on the other, you act as the scout for the LPs, whether these are institutional funds or family offices or high net worth individuals, for their ability to actually have a qualified source of deal flow to be able to then do more structured, more meaningful early stage rounds, and like what we call a seed round or like a Series A, depending on the vintage, it can change quite a bit. What's the competition like in this space? How many more coalition partners are there, and how many more can the ecosystem support?
It's usually less about, oh, we're going head to head with other investors, and it's really just timing. If we talk with a founder early in their fundraising process, and I mean, in some cases, we've even had the opportunity to help them find and choose their lead investor. Like, that's the dream state. It's not always the case. And actually, some of our great deal flow comes from other investors that we love to invest alongside, whether it's firms that also write collaborative checks, the new homebrew model or Shrug, or lead investors who are specialized in the early stages. And our job is to hopefully have those conversations earlier and earlier. And then I will say, this isn't something I'm happy about, but I think angel investing activity is down quite a bit. We really saw an angel investing boom probably around the same time I started angel investing. It became very trendy in ways that are both good and bad. But I think we're in this lower liquidity moment in the startup ecosystem, right? Where there are fewer exits. And so there are just fewer people who have the ability to write meaningful angel checks into startups. And so in some ways, we're hopefully helping to fill that gap.
What's the due diligence process? I'm assuming that you get the pick of the litter, but what makes the cut? Do you have a framework? Is it case by case? Tell us a little bit about how you guys go about making decisions when it comes to investing in these wonderful founders.
We actually did a sort of review of this recently. It's because my partners are full-time company builders and part-time on Coalition. We tend to be in execution mode. We don't have the luxury of sitting around and talking about what's their approach to investing and writing long Substacks. And so it's actually been really fun to zoom out and think through, okay, what do we really care about? We're having these conversations where we're always recording what is the bet we're making? Why are we excited about this founder? What's their unique insight on the market? But when it comes to the companies that we're really excited about and end up backing, almost always the founder that is the thing that gets us over the edge. And for us, it comes down to three things that we assess. And the first is, what is this founder's why? And you'd be amazed how often that doesn't even come up in a pitch conversation unless you ask directly. Founders are jumping right in. So this is an important problem. Here's why you can build a big business. Here's our approach. But I think we've seen across my three partners who've built companies from early stage to unicorns to exits, the why, it's what sustains you through the inevitable ups and downs. And so really understanding that founder's why. And there are a bunch of different versions of this, right? In some cases, it's a company that has really come out of their personal experience. One of our portfolio companies is called Maya Oncology. It's an onco primary care business. The founder was a cancer survivor herself and was inspired to build this based on her own cancer treatment. And so this is the company she was born to build. It's so personal for her. There are also founders who have a chip on their shoulder. Maybe they were a number two at a company and they want to show that they can be number one. Maybe they've been underestimated, but they're really out to prove. So it's a more internal reason versus an external reason. There are also founders who are just on a mission, right? One of our companies is Journey Clinical, and they provide the clinical infrastructure to enable therapists to incorporate psychedelic medicine into their practices. And the founders, Jonathan and Miriam, are such huge believers in the power of psychedelic assisted therapy and its ability to transform people's lives. And so this company is a mission for them. The second thing we really look for is, I guess, call subject matter mastery. And this is really assessing their understanding of the problem they're solving, the market they're operating in. Sometimes you're looking more backwards. What have they built previously in their career that would lead us to believe that they're going to absolutely crush and have an unfair advantage in this space? Sometimes it's like the slope and pace of learning. Wow, this person, stumbled on this problem 2 months ago and already they have encyclopedic knowledge and have the whole category mapped. And obviously we have an advantage if it's a problem we understand or a market we understand, but that's part of the fun. If it's something that's outside of our area of expertise, we have this incredible operator network. So when we were looking at Campus, which is a virtual community college and just an absolutely incredible business, founder is setting out to transform higher education. He had acquired a for-profit school to be able to accelerate this, and we didn't know how to diligence that. And we happened to have 2 operators in the network who were literally experts on maintaining accreditation and how to do this right and where companies have gone wrong. With their help, we were able to assess that, wow, like Tade understands this inside and out and has checked every single box you could imagine. And that got us super excited. And then the last thing we look at is just like drive to win. I think having a really competitive spirit is helpful in building a startup. People need to want to take really big swings, right? This is what the venture capital business is for. It's not for small businesses or growing gradually. And this is how scrappy is this person? How quick are they to get started? Do they understand the game? Are they driven? Are they resilient? Have they done hard things? Are they determined to win? And I think that paired with the sort of subject matter mastery and the purpose, the why, is like a really powerful combination. And I think every coalition deal we've done, we think about those things in balance, but always someone really spikes in at least one where we're like, oh my goodness, person is either the world's expert on this thing or their story for why they're doing this is so powerful and they're going to get this done no matter what, or they're off to the races. They move really quickly.
I want to switch gears a little bit. We talked about the founders quite a bit, but you co-founded this with 3 other wonderful women that have full-time jobs.
Yeah.
So you're the only person running the show. And you went from a highly structured environment that was boxing to somewhat of a structured environment with social capital, and back into early stage, let's call it, but extremely chaotic period of a company's history at Glossier. And now it's almost like you're running towards the unknown, and this is probably just like the most unstructured you've ever had to deal with. You're the one that picked the lawyers, checked the docs, found the auditor, etc. We were talking about this earlier. What are the things you wish you knew before you started this, and what are the lessons that you're going to bring into the next vintage of Coalition from a perspective of actually running the firm?
It was quite a transition to go from being an operator within an existing structure where your job is really just to figure out how can I have the most impact on this company, on this thing that has a lot of norms and other stakeholders and all of that, to what structure do we want to build? Because the crazy thing about venture is that I think there are like any number of ways to do it. You can meet 2 fund managers with just wildly different sourcing strategies, decision-making processes, portfolio constructions, and they can both be wildly successful. But there's a lot more art than science, I think, a lot of times, especially in the early stage when you're making so many decisions and ambiguity. I would say there are probably like 2 categories of things that like kept me up at night my first year building Coalition, where I guess with hindsight, I would have built more of the infrastructure ahead of time versus building the plane while flying it. And the first is like a lot of the stuff you mentioned. Do you have the right lawyers? Do you have the right tax advisors in place? Are you approaching reporting across your portfolio in a way that's scalable and works for you and works for founders? And there was a lot of stuff that I had to learn on the fly. I'd been in a VC firm before, but I wasn't spending a ton of time with the back office. And there's like a lot of admin in venture. I think the biggest thing I would say is like the role of an emerging fund manager and the role of a partner or GP at like a large platform are so different, because when you're building a fund, there's a lot more to do than invest. I think it took me a while to figure out, okay, what are the things we have to get right now, or we'll be paying the price for it 8 or 10 years down the road? And how do I make sure I have a team of service providers that I really trust and who can help me do some of the stuff that I'm not an expert in yet? And then the other bucket was like much more psychological. I remember when I was at Social Capital, I would have friends ask me like, "Oh, do you want to like shimmy on over to the investing team someday?" Because the investing is the shiny thing in venture, right? At the time, my answer was no. I like my feedback loops. I know if I'm doing a good job at my job. I looked around at my partners. They were doing 10 meetings on some days, but then they'd only make a couple investments a year. And then we'd have to wait 8 years or whatever to see if those were good investments. I think that is crazy to be so busy, to mostly be saying no, and then to have a few decisions that you'll make at any given year, one of which you hope really matters, but you won't know for a while. And I'm a type A Enneagram 3 person. I like to know if I'm doing a good job at the thing that I'm doing. It was a sort of destabilizing process to come to terms with the fact that I just wasn't going to have that luxury on a number of dimensions, and that I was going to have to figure out how to build confidence and conviction in our approach without the benefit of performance reviews. It was really, are these the founders we're excited to be working with for years to come? Is this the impact we want to have in the ecosystem? Is this the product we are all born to build in this industry? And finding other ways to build that confidence and conviction. And it took me a while, and some of the infrastructure that was really helpful, just having relationships with other emerging fund managers, because everyone's going through some version of this, especially if you come from operating. You have such an advantage coming from operating because you can speak to founders in ways that I think are different than someone who's invested their whole career. But also you're mourning the signals you used to have and the sort of milestones that you used to measure yourself against. And you have to find different ways to make sure that you're always learning, always iterating, always getting better at the job, that obviously aren't tied to the 10-year outcomes. So this is a job that you do in ambiguity, and it's like the ultimate marshmallow test, and that's what you're signing up for. And so the mental game is a big piece of it. I appreciate that now, but at first it was jarring.
We hear that quite a bit. It's quite a constant, especially in this new generation of emerging managers that come from an operator background. And what you were saying, there is always a way to benchmark your performance. And then you enter this space where there isn't one, or there will be, but it's not going to matter for the day-to-day of the reality you live in. The question that we ask everybody, it's what is that you haven't talked about that you wish that you were able to share, and you're going to walk away from this conversation and be like, dang it, prepared to talk about this and Fabry didn't ask it. And here I missed my opportunity to share the pearl of wisdom.
Oh man, as a former comms person, I should have been like, these are the 5 talking points that I want to hit. I think there's a bit of like conventional wisdom that investors are either neutral or net negative to a business. I do think though, and I believe so strongly, that not building a cap table that's your strongest network is a myth, because these are the people who are most incentivized to support you in your success. You look at platforms like Y Combinator, and one of the reasons like repeat founders will do Y Combinator again is for the network and to have access to all those incredible peers. Networks are an essential ingredient to what we all do, and a cap table should be like your most important network. And as you were saying earlier, it's not one firm to solve every problem that you have. It's who are the people or the groups of people who are going to be really impactful as you scale. And of course, it's not going to be the thing that makes your company or breaks your company. That's always going to be the founder. But some of the support at the edges can be really impactful. Early stage investing is so opaque. It's very access driven. It's very network driven. It's why it's hard for newer players to break in, and why as an emerging fund manager, if you don't have a sourcing advantage, you're dead on arrival. But I do hope there over time we'll find ways to make this part of the job easier for founders, where it's not just like, oh, my lead investor introduced me to 5 people who always say yes to their deals, and where founders can be really strategic about bringing together the people who will help them the most. I think that's why we exist.
Actually, this is a great conversation. We love what you're doing, and we welcome more of you in the arena, because like you said, this is not just a matter of collaborativeness. I think it's a true generational change. And I'm quite happy that folks like you, with the background that you have and your why and why you, and how driven you are shines. So I think founders will be extremely lucky to have you be a player in this ecosystem, whether you're on their cap table or not. What is the best way to get in touch with you?
Whether you're a founder or we also have our operator network, LPs certainly love chatting. Ashley@coalitionoperators.com is my email. I used to have my DMs open on Twitter, but then I think with the rise of AI, I was getting like 20 spam messages a day. And so I shut them, but LinkedIn works, or if you tweet at me, I'll follow you and you can slide into my DMs.
Thank you so much for dedicating your Friday afternoon to us. And I'll make sure to come see you again in New York next time I'm in town.
Thank you. You've actually made me feel like maybe I should do a little bit more public stuff. I feel like I've been in like building mode. But this is really a fun conversation to have. It's funny because I'm used to telling other people how to do this. And so I don't like being the spokesperson, but it's good.
Love it. Speak soon.
Awesome. Take care. Bye.